The time is now, Quest Nutrition, or risk getting cooked. So I'll decode that introductory statement a bit later in this content, but on October 23rd of 2025, the Simply Good Foods company reported its fiscal 2025 fourth quarter earnings for the period ending August 30th of 2025. And I'll be utilizing those financial statements along with notes I took while listening to the earnings conference call and any relevant publicly disclosed information to obviously update you on how the Simply Good Foods brand portfolio performed recently, but also utilize everything as the contextual backdrop for my expanded strategic commentary around convenient nutrition market dynamics and trends. Additionally, for those unfamiliar with the up-to-date Simply Good Foods portfolio architecture, due to an acquisition finalized in June 2024, it now includes Only What You Need, or better known as OWYN, Quest Nutrition, and Atkins, yes, originating from the Atkins diet, which was the original brand asset involved with the SPAC transaction from 2017 that created this public company. But I mainly wanted to alert you about the M&A transaction, as a small amount of acquisition-related financial impact remains within the year-over-year comparatives in the fiscal fourth quarter of 2025. Also, since this reporting period marks the end of fiscal 2025 for Simply Good Foods, I will do my best to highlight that larger acquisition-related financial impact in those annual numbers. But that's enough with the foundational portfolio architecture information. So let's get into some financial results. In the fourth quarter of fiscal 2025, the Simply Good Foods portfolio reported generating net sales of $369 million, which was down 1.8% year over year. But don't fret too much on that relatively weak performance, as there was an almost 7 percentage point headwind from lapping the extra week in the fourth quarter of fiscal year 2024. So while non-comparable revenue contribution from the OWYN acquisition did contribute 1.5 percentage points, organic revenue was up 3.5% year over year. And as I noted earlier, since this reporting period marks the end of the company's fiscal year, I want to quickly run through the annual performance as well. Over the last 52 weeks, Simply Good Foods reported net sales of $1.45 billion, which was up 9% year over year. But again, while the organic growth was 3% year over year, that reported annual net sales metric was driven by non-comparable revenue contribution from the OWYN acquisition and extra week in the year ago period. Also, in terms of commercial performance geographically, only 2% of annual net sales come from areas outside of North America. Additionally, on a reported basis, fiscal year 2025 international revenue fell almost 10% year over year, as Simply Good Foods has deprioritized geographical expansion plans. But jumping back into quarterly insights, the total Simply Good Foods retail takeaway for the 13 weeks ending August 31st of 2025 increased about 4% year over year across US measured and unmeasured channels. As a portfolio, the Simply Good Foods company is well below the measured channel nutritional snacking categorical average of 13% growth. But as you'll hear next, the culprit is Atkins, which severely dragged down the positive performance of Quest Nutrition and OWYN. So let's separate out the portfolio brands, and we can start with a review of how Atkins Nutritionals performed during this quarter. And even if you haven't been an avid follower of my content for the past several years, I guess you could intuitively assume that it's been tough sledding recently for legacy brands positioned within the weight management category. The most difficult task has been flipping the historical Atkins brand messaging from this negative restriction diet emphasis to its nutritional snacking products being viewed as a more positive, proactive, convenient, foundational nutrition focus. Moreover, Atkins must contend with dramatically changing behavior in the weight management consumer cohort. A major cause of this change has been the rise of weight loss pharmaceuticals, which have increased consumer interest in medically supervised and evidence-based strategies. Simultaneously, consumers are seeking comprehensive wellness that links diet, exercise, and weight to overall physical and mental health, including factors like stress and hormonal balance. And while the consumer approach to weight management is shifting away from traditional willpower-based dieting towards integrative and personalized health solutions, Atkins shouldn't even entertain the notion it could compete with a powerful predictive health platform like Hims and Hers. Instead, Simply Good Foods must wholeheartedly try one last comprehensive strategic plan that can create positive commercial results from the company-supported consumer research that showed 80% of consumers are looking to lose weight or maintain a healthy eating lifestyle, and Atkins is distinctly and uniquely positioned as the most trusted low-carb, low-sugar solution. Moreover, when consumers try Atkins products, they are pleased and delighted. If company leadership cannot shorten the gap between what people say about the Atkins brand and properly reaching those consumers in large retail channels, I'd strongly advise them to follow Glanbia's lead regarding SlimFast and divest its legacy weight management brand. But in all honesty, I'm likely not telling the Simply Good Foods leadership team anything they don't fully acknowledge already, as initiatives to strengthen the brand, including new marketing and digital campaigns, highlighting updated positioning, new packaging, and innovation, along with new initiatives to improve entry price points in the Atkins bar platform, have begun to show up in September, aka the first month of fiscal year 2026. The current phase of Atkins' revitalization plan seeks to enhance profitability and long-term sustainable growth, but will require strategic actions focused on a smaller brand footprint, like optimizing assortment, cutting certain low ROI marketing programs at key customers, and distribution losses will create further short-term revenue headwinds in fiscal year 2026. And I hope that strategic commentary isn't viewed as some kind of pour some sugar on it financial storytelling method either, as there aren't enough sweeteners globally to mask the downright bitter Atkins quarterly performance. But in the fourth quarter of fiscal 2025, retail takeaway in the US measured and unmeasured channels combined for the Atkins brand was down around 12% year over year. Moreover, fiscal year 2025 was brutal, with retail takeaway in US measured and unmeasured channels combined for the Atkins brand declining 10% year over year. However, maybe one silver lining of the Atkins distribution and associated shelf space losses is that retailers are largely reallocating it to benefit the other Simply Good Foods portfolio brands. Obviously, this would make for a great transition, so if you don't mind, I'm going to switch up the typical order by initially examining the recent performance of the newest Simply Good Foods portfolio brand. Despite some product quality hiccups this quarter due to since corrected raw material sourcing decisions around its pea protein made prior to the acquisition, OWYN continues to be one of the fastest growing RTD protein shakes in terms of dollar sales and one of the largest multi-pack sports nutrition protein beverage brands overall. But in the fourth quarter of fiscal 2025, retail takeaway growth for OWYN across the measured and unmeasured channels combined was about 14% year over year, resulting from a balance of distribution gains and velocity growth. Moreover, despite lapping sizable distribution gains last year, OWYN has continued to accelerate performance across all major sales channels, including ecommerce and all key retail customers. And if you're curious to know when distribution gains could subside, the brand's ACV is currently only in the mid-60s, which is still about 20 percentage points below market leaders in protein RTD beverages. Then, in terms of sell-through, OWYN currently has substantially higher velocity relative to key plant-based protein RTD competitors. Also, OWYN has a powders business that's comparatively small but is growing triple digits year over year and will likely play an increasingly important role within the brand's growth story over the next several years. As for performance in fiscal year 2025, retail takeaway growth for OWYN across the measured and unmeasured channels combined was about 34% growth year over year. Additionally, household penetration grew 100 basis points, reaching 4.2%, which reflects significant room for growth. The integration work is largely completed now, and OWYN is perfectly positioned within a highly appealing incremental consumer segment for Simply Good Foods, so expected increases in trade spend and brand investments in fiscal year 2026 should provide strong near-term tailwinds. Also, OWYN will undoubtedly benefit further from Simply Good Foods' go-to-market scale capabilities and category advisor relationships with every top retailer. And that's not even considering when OWYN fully leverages the massive R&D capabilities to launch groundbreaking plant-based protein products and expand into new formats. But let's shift into the largest portfolio brand, Quest Nutrition, which accounted for about 63% of the total Simply Good Foods quarterly revenue. And over the 13-week period ending August 31st of 2025, retail takeaway for Quest Nutrition across the measured and unmeasured channels combined increased 11% year over year, continuing to perform at or above the active nutrition segment of the convenient nutrition category. And the brand's strong performance has been driven by an increase in household penetration, significant base velocity growth, increasing buy rates, distribution gains, and new product introductions. Then, if we examine quarterly retail takeaway by Quest Nutrition product platform, bars grew 2% year over year, supported by the Hero Crispy Bars and recently launched Overload Bars. And while the recent bar platform performance hardly makes internal or external stakeholders jump for joy, it's important to remember that Quest Nutrition hasn't shied away from bar format innovation or renovation activities recently. So whether it's consistently revamping formulations, exploring new variants, or testing new price pack architecture strategies, Simply Good Foods leadership understands the larger innovation risk mitigation role the bar platform plays within Quest Nutrition. Additionally, Quest Nutrition has stepped up innovation efforts within the RTD beverages and sweet snacks product platforms to support brand growth, with recently launched products meeting internal expectations. And while company leadership hinting at more RTD beverages and sweet snacks product platform innovation coming in fiscal 2026 is certainly meaningful, like the recently released Bake Shop protein donuts, nothing quite compares to the level of enthusiasm surrounding its Quest Nutrition salty snacks product platform. Commercially, the Quest Nutrition salty snacks product platform continues to outperform, with retail takeaway up 31% for the quarter and 34% for the full year. And after representing only 20% of the total Quest Nutrition retail sales 3 years ago, salty snacks is now on target to become the largest product platform by the end of fiscal year 2026. Yet, as I've stated countless times previously within these quarterly content pieces, Quest Nutrition is arguably only scratching the surface of this multi-billion-dollar Simply Good Foods redefining level of opportunity. But, and there's always a but, which I recently revealed in a piece of content that examined, among other things, how PepsiCo plans to redefine the protein conversation. So while most are focused on how Frito Lay snack brands like Lay's and Tostitos are exploring new oils and removing artificial flavors, the wildest new product announcement involved the Doritos brand. Yes, PepsiCo announced it would be adding protein to more Quaker, Sun Chips, Popcorners, and Smart Food products, but Doritos protein is crazy, or maybe not, based on something I mentioned in a July 2025 content piece. That doesn't mean I wouldn't like to see a big CPG name like PepsiCo acquire Simply Good Foods. Yes, I know PepsiCo just acquired Siete Foods and Poppi, giving them a leverage ratio above historical average. But looking past that, I think it's a great fit. It's hard to argue that PepsiCo wouldn't be the ideal partner to scale Quest salty snacks into a multi-billion-dollar product segment. And as you were just reminded from the final part of that clip, within last quarter's Simply Good Foods earnings content, I mentioned the not so wild sounding any longer emerging intersection between these two public companies. But even though PepsiCo announced the protein-ification of its expansive packaged food and beverage product portfolio, don't instantly think it's game over for Quest Nutrition. It does, in fact, bring a slew of challenges, but also increases the overall salty snacks opportunity for Quest Nutrition. Though, let's start with laying out the thesis around its most impactful positive aspect, as products like protein Doritos, Sun Chips, Smart Food Popcorn, or whatever else will without a doubt grow the overall addressable market size. And I can say that with complete confidence because Frito Lay, Kellanova, Campbell's, or whichever other notable large salty snacks brand portfolio would never allow retailers to stock their proteinified product versions in the healthy living by the pharmacy sections. It simply won't happen, primarily because these merchandising sets have a much lower foot traffic compared to mainline snacking aisles or other impulse purchasing placements. So These big CPG innovations will successfully force the type of large retail merchandising paradigm shift Quest Nutrition has been yearning for, as long-term secular wellness and convenience trends have converged in such an explosive manner lately that high protein, low carb, low sugar products are mainstreaming quickly. Additionally, with the inclusion of big CPG products, much of the expected burden would be offloaded from Quest Nutrition to prove these reconfigured salty snacks merchandising strategies could be highly lucrative across large retail channels. Though, when the merchandising reconfiguration proves effective, it would create a massive snowball effect that leads to increased placements within stores, further sales channel penetration, expanded distribution, and honestly, a path towards ubiquitous availability of protein salty snacks. Again, this predicted total addressable market growth is frankly why the single most important aspect of the Simply Good Foods strategic game plan has rightfully revolved around supporting physical availability expansion of the Quest Nutrition salty snacks product platform, from increasing dedicated human capital to investing in new, incremental, and more flexible manufacturing capacity. However, here's where things turn more challenging, especially if Simply Good Foods leadership doesn't accurately and aggressively adjust its mindset towards a long-standing Quest Nutrition competitive edge. In all honesty, Quest Nutrition has relied a lot, maybe too much, on being exceptional regarding big I product innovation activities. And when Quest Nutrition was mainly competing against other challenger or upstart convenient nutrition brands, its R&D prowess made focusing on product-based differentiation a sound strategic decision. But big CPG jumping into protein snacking limits the effectiveness and no longer provides a long-term defensible moat around product-based differentiation. Additionally, if Quest Nutrition wants to retain or grow its share leadership within this expanding and mainstreaming protein snacking market, Simply Good Foods leadership must understand that the more is better product value proposition won't win across later stages of the adoption curve lifecycle. To help better visualize what I'm referring to, think about the additive-free natural versions of iconic salty snacks called Simply that Frito Lay North America created around the early 2000s. These weren't directly positioned to compete against the die-hard natural brands adored by granola heads in the Pacific Northwest or Boulder, Colorado, but sought to retain consumers who might otherwise try natural alternatives, but who trusted Frito Lay far more than the emerging ones to deliver on a great taste experience. Similarly, these big CPG versions won't contain the same level of protein per serving compared to the various Quest Nutrition salty snacks, but again, that's not the point. Then, how does Quest Nutrition combat this defensive move by big CPG? Simply Good Foods must overcome the challenge that mainstream buyers don't know about Quest Nutrition, with a household penetration of only 19%. Largely due to it historically not needing to invest heavily into widespread brand awareness building marketing campaigns. Alternatively, it would be difficult to find consumers that don't know some or damn near all of the Frito Lay PepsiCo product portfolio, as it holds a household penetration of, I think, 99%. So even though Quest Nutrition obviously has more distinctiveness compared to the average big CPG salty snacks brand, not enough mainstream buyers know about it yet and cannot, at least currently, count on that powerful strategic tool to gain a competitive edge that amplifies presence, recognition, and market share. But that shouldn't imply Quest Nutrition will accept being a small fish in a new, much larger pond swimming in the sea of sameness. Instead, I believe with a signal being its boosted marketing budget in fiscal year 2026, that Quest Nutrition will lean further into its brand distinctiveness, which can transform a product from commodity into a perfect experiential foundation for brand storytelling, essentially becoming the strategic substance with signature style that can set it apart from a landscape of lesser alternatives. Finally, Quest Nutrition is perfectly positioned within and has taken full advantage of a broader category that has grown at least high single digits for the past 5 years, reinforcing how relevant it is today and supporting studies that show close to 3/4 of adult Americans are actively seeking more protein, but what got them to this first billion in retail sales won't get them to the next multi-billion-dollar goal. And there's a reason only a few ingestible CPG brands launched in the 21st century have reached this ambitious commercial level. The required greater quantity and quality of distinct brand touchpoints needed to continually get noticed, recognized, and chosen across the adoption curve lifecycle is rare and difficult to achieve. But Simply Good Foods is on a journey to rapidly evolve its organization to win in this dynamic space, and it will be exciting to see what happens next. But I hope you enjoyed the first principles thinking that went into my latest YouTube video. If you did, can you do me a favor by hitting that like button? That quick and free action helps YouTube know my content is worth spreading to more people. Also, we're getting really close to reaching my next subscriber goal, and it would be great if you join me on this journey. But to do that, we need to fix the fact that slightly more than 3/4 of you that are watching this video right now are not subscribed to my YouTube channel, and that hurts my feelings. Regardless, I want to thank you for giving me some of your attention and time, and I'll see you on the next one.